to friends. Same year. Same kind of accident waiting for them. Ria skips insurance, it feels like money down a drain. Arav quietly pays a small premium and forgets about it. For 3 whole years, Ria looks like the smart one. She saved every rupee Arav wasted on cover. Then one bad day arrives, the way it always does. A sudden hospital bill, 8 lakh rupees. Ria's savings, years of careful work, drain in a week. Arav has the exact same accident, the same bill. His shield absorbs it, he pays almost nothing. Same risk, to completely different endings. The difference wasn't luck. It was one small decision. Today we'll make sure you end up on Arav's side. First, kill the biggest myth about insurance. Insurance is not a savings account or an investment. It's not meant to grow your money or pay you back. Picture it instead as a shield, plain and simple. You pay a small, known cost every year. In return, it stands between you and a disaster. A disaster so big it could wipe you out completely. You are not buying profit, you are transferring a risk. A risk you genuinely could not afford to face alone. If nothing bad happens, the premium is not wasted. You bought certainty and a year of sleeping well. Good insurance is boring on purpose, that's the point. Here's the rule that decides what to insure. Costs come into very different sizes. First, the small annoying ones you'll hit often. A cracked phone, a flat tire, a doctor's visit. These sting, but they won't ruin your life. You handle those yourself with an emergency fund. Second, the huge rare ones that destroy you. A house fire, cancer, a fatal accident, a long hospital stay. Rare, but one of them can wipe out everything. That second kind is exactly what insurance is for. Simple rule, insure the ruin, not the annoyance. A salesman, though, loves selling the tiny stuff. Small policies, big commissions, almost no real protection. Now the first big shield, life insurance. Imagine 2 doors selling you life cover. Door 1 is term insurance, pure protection, nothing fancy. If you die during the term, your family gets a large sum. If you don't, it simply quietly ends. That's it. It's clean, it's cheap, and it does exactly one job. Door 2 is shiny, with charts and returns promised. Hold that thought, we'll open that door next. For a healthy 30-year-old, term is shockingly cheap. 1 crore of cover can cost less than a daily coffee. Arav picks the boring term door without hesitation. Big protection for his family, tiny cost to him. That is what a real shield looks like. Now open that shiny second door carefully. These are combo policies, insurance plus investment in one. Whole life, endowment, money back, the fancy names. They promise to protect you and grow your money together. Picture pouring both into one blender and hitting go. What comes out is protection that's weak and returns that are weak. The cover is small, maybe 15 lakh, not 1 crore. The money grows slowly, just 4 to 6%. And hidden fees quietly bite a chunk every single year. You pay far more, for less of both jobs. Ria, years ago, was sold exactly this combo plan. Arav instead took cheap term and invested the rest. Same money, but Arav's shield is far, far bigger. So never blend protection and investing together. The simple winning move has a name everyone knows. Buy term and invest the rest separately. Take that bundled product and split it cleanly in 2. Lane 1, cheap term insurance does the protecting. Lane 2, a simple index fund does the growing. Each tool does the one job it's actually good at. Your shield stays big, your money grows freely. No tangled fees, no weak compromise on either side. You can see exactly what each rupee is doing. This one split quietly saves people lakhs over a life. Keep the jobs separate and both do them well. That's the whole secret hiding behind fancy plans. The second big shield protects your savings, health insurance. One serious illness can cost lakhs in a few weeks. Without cover, that bill attacks your savings directly. Watch what happens to an uninsured savings jar. A hospital bill, like a monster, smashes straight into it. Years of saving can vanish in a single admission. Health insurance stands in front of that jar as a shield. You pay a yearly premium, the insurer takes the big hit. Your savings stay whole while you focus on getting well. Many young people think they simply don't need it yet. I'm fit, I'm young, illness is an old person problem. But accidents and sudden illness don't check your age. An unguarded jar is one bad week from empty. Here's the part that trips most people up: timing. Health insurance is cheapest when you are young and healthy. Lock it in now and that low entry stays in your favor. Wait until you are older or already sick and it changes. Premiums double or the insurer simply refuses you. The cover you wanted is suddenly priced out of reach. Buying early is like fixing the roof before the rain. Arav locked his health cover in his 20s cheaply. It quietly sits there, ready, the day he ever needs it. Don't wait for a scare to go shopping for a shield. Get a solid health policy in place while it's easy. And there's one more asset most people forget to shield. The very thing that fills every jar in the first place. Your biggest asset isn't your car or even your savings. It's your ability to earn, your future income. Add up a lifetime of salary and it's worth crores. That earning power is the engine filling every jar. Now picture the engine suddenly switching off. A serious injury or illness stops the paycheck pipe. The bills don't pause, but the money flowing in does. That gap is what wrecks most families quietly. Income protection sends a monthly support pipe in its place. If you can't work, it keeps paychecks flowing to you. People insure their phone but forget their paycheck. Yet the paycheck is what pays for everything else. Shield the engine, and the whole machine keeps running. Now the policies you can usually just skip. Extended warranties on a phone or a fridge. Standalone gadget insurance for everyday devices. That little flight insurance add-on at checkout. Each covers a cost you could comfortably absorb yourself. Remember the rule, don't insure the annoyance. These are the small cost basket items, not real ruin. Worse, many are combo style, high fee, thin cover. The seller's profit meter loves these little add-ons. Big commission for them, weak protection for you. Drop them in the skip bin and keep your premiums lean. Save that money for the shields that actually matter. So how much of each shield do you actually need? For the small annoying hits, an emergency fund handles it. A few months of expenses saved, plain and ready. For health, aim for solid cover, around 10 lakh. Enough that one big admission won't touch your savings. For term life, think in multiples of your income. A rough guide is roughly 10 times what you earn. Earn 10 lakh a year, aim near a 1 crore cover. Add more if you carry a home loan or have kids. Enough to clear debts and keep your family steady. And remember, you mostly need life cover at all. Only if someone actually depends on your income. So build 3 shields, in this order, and relax. Health to guard your savings, term to guard your family. Income protection to guard the engine behind it all. Arav sleeps easy, Ria learned this the hard way. Subscribe and shield the ruin before it arrives.